Hey, it's Richard with Matthews Wealth Management. We're going to cover the October 2023 asset class performance. I'm also going to edit the color because, yes, I am very sunburned, but Clemson beat Notre Dame. Great game. So let's jump right in and take a look at what's going on this year. So NASDAQ, right? This is large cap growth and tech, basically. And really, it's only a couple of companies, but 29.63%, and a lot happening here right around the close of October going into November now. And you can see the shape similar to S&P, where we've got the up, down wave, and then, suspended debt ceiling and so forth. Money flows to large growth. But look at this. You got the up, down, up, down, up, down, up. All right, so is something happening? That's the real question right now. But 29% and NASDAQ is crazy. S&P is the same shape, but much different to a different degree, I suppose. 13.7, so less than half of what NASDAQ has done. And you've got the up, the down, the even, and then the big gain. And this is the same structure with a huge rebound, right? And as a matter of fact, today was a kind of a flat day, but I think now that's 6 straight days in a row of market gains, and bond yields have not crashed, but huge drop, which I'm, thrilled about. If you're a client and you watch the reallocation that we did back in September, I'm happy with bonds right now, very happy. So let's go look. Oh, Dow Jones moderate for year to date, not so great. 3.63% is what we're looking at for the Dow Jones moderate year to date, and it's the same structure, right? Up, down, and there's the big rebound since November, but as you'll see at the end, it's been really rough on moderate people this year. It's a flat year, basically. That 3.63 is basically what's happened here in November. So taking a look at the chart, large cap, big companies, value, everything's up on the year. However, 26 versus 0.5%, that's a big deal, right? That's weird and annoying for those of us that run a wealth management firm with predominantly retirees as opposed to lots of non-qualified funds. Values over here hit super hard, down 5, down 6.5. You have all the growths up year to date, but look at this. Look at these big fall-offs that we just saw for the month of October. And honestly, it's more of a September and October has been rough on them compared to where they were. Debt spending or debt ceiling suspension pre-labor. Are we going to talk about labor yet? I don't know. Go back, watch the debt clock video that we did. So anyway, let's check out international. Still up, but a really rough month, and emerging now down after a really rough month. So people prefer U.S. equities to international. That appears to be the driving force there. This is slightly new. It's also a repeat of what we saw in the first half of the year. Short terms up, and so for short terms to be up 2, high yields to be up 4. Just getting hammered on those long-term bonds, right? The negative 9.65. Tips aren't doing inflationary returns either, and intermediates are still barely positive on the year. So this changed since I ran the numbers. Like I run the numbers at the end of the month, so end of October on Halloween, but this has gotten better just because the yield's crashing, but not really. All right, so let's talk about commodities. Oil. Oh, man, I'm usually good at formatting stuff, but it's been a long day, and I missed a format there. That should have been red, right? Huge retracing on oil, down 8% in the month. And hey, there's Israel and Hamas. So really, we don't care. We think that oil's cheaper. Yeah, because it's either Armageddon or it's not. That tends to be how people think of it. So gold, dude, I have done it twice now. That should have been green, not red. Look at that. So 2 mistakes, 1 video. It happens. It's all good. But gold is up 8.7 on the year. Real estate down and down. And then Bitcoin, that's for you, Richard. Yay, I'm sure you're thrilled. In fact, I know you are because you were texting me about Ethereum and some good memes that come out of that world. But yeah, if you like your currencies volatile, that's a great currency. Or it's an alternative. I guess, I suppose. But back up to the 34,000 mark when it's 16 in January. So that's what's going on there. All right. So overall, this is through the end of October, as opposed to the first slides, which are current to today. NASDAQ up 22, S&P up 9.6. Moderate, that's what I was saying, flat. And we are a boring 2.5. Clients aren't thrilled. I'm not thrilled. I'm not super happy, but outperformance, yay, whatever. Fear of missing out. Man, if only we had known. Whatever, it's a bubble. We'll see how that backtracks. Inflation won't do it because that's NASDAQ. Anyway, I won't dive into that. That was a quick video, so we are done. Check on the M2 and balance sheet next.